So let's change gears. I now want to walk you through what's happening in some of the regions, like I said, that we're lending into. The Caribbean. So banks have credit appetite for national infrastructure assets, such as airports and utility-type projects, and I heard a lot about them yesterday. The infrastructure funds, U.S. private placement, institutional investors, and international banks, they're all looking at the Caribbean, but they want quality infrastructure deals. Fiscally challenged governments that have deferred major capital investment for years are now seriously looking at major infrastructure development. So I heard lots of very interesting lists of projects that governments want to get done, and this will hopefully spur some economic growth and tourism in the area. So that's all very, very positive. It's a good impetus to support a project. Multilateral agencies are helping governments evaluate opportunities for privatization of major infrastructure assets, and they're also looking at new airports and ports and utility. And again, that's good. That's a community that you definitely want to get full support from. So there's large demand, but clearly not all the projects are bankable without some kind of multilateral agency guarantee or credit enhancement, but that's the opportunity. Spreads are increasing, but really depending on what the sovereign profile and the project-specific risks look like. And again, multilateral and export credit agencies are providing, I'll say, competitively priced offerings, which is, again, a good thing. Longer tenors are provided on some selective infrastructure deals up to 15 and 20 years, where projects are backed by the MLAs or government guarantees. Most banks are less likely to offer tenors anywhere close to 10 years, and some of the longer tenors have been achieved through U.S. private placement offerings. So in summary, clearly banks have an appetite to lend to well-structured projects. There's a lot of money chasing perhaps too few well-structured deals. You have to think in the mind of an equity sponsor or a bank that has $100 in hand and is looking at the infrastructure sector globally and trying to figure out where they want to place their money. And that's how this region has to look at attracting those dollars. So pricing and terms have improved in the borrower's favor for the past several years. I would have never known we had a credit crisis in 2009. Case in point, if I look at the Canadian P3 market, 2.5 years ago, the spreads were 200, 250 basis points. Today, they're barely over 100 basis points. And that's a lot different than what I heard yesterday with 500 and 550. And so why are some deals more attractive than others? What makes the deal bankable? So here's a few good reasons. Sponsors, reputable sponsors. Sponsors with a good track record and a reputation of getting projects done on time and on budget. And I heard that with the airport yesterday, which was good. Those with a history of doing similar deals with similar risks and similar technology. We want sponsors who have done this before, who have been around the block before. The market likes sponsors with access to capital with strong balance sheets and access perhaps even to multiple capital markets, not just private companies. There's more attraction to public companies that can actually go to the public markets and raise money to support project finance. You want strong counterparties, experienced and reputable contractors and operators. In power and energy, you want investment-grade off-takers. In P3, again, strong sovereigns. You want good, strong contractual or regulatory structure. Lenders like contracted cash flow, either through